The scenario we see most often in markets, call it your break and butter trade, will be this one right here. Thanks everyone for tuning in. In this video, I'll be going through the most important price level we should be aware of as traders in markets. The importance of this price level is namely the separation between a trending and a ranging choppy market. So let's get right into it. I'll be going through how to determine directional bias outside the charts, bypassing our programmed confirmation bias. Then I'll go through 5 potential trades around the level called trend origin point. We hear a lot about confirmation bias as traders and how detrimental it is to our trading. But still, when we make a decision, we think we have made it rationally without the pre-programmed effect that chart patterns instilled in us through social media and several outdated educational sources, like classical technical analysis and so forth. This is one aspect of this game that we have to go around and not try to plow through. Namely, we have to hack our confirmation bias rather than rationalize through it. A trader confirmation bias kicks in a split second once he looks at a chart. Our solution for that? We determine direction, we do analysis outside the charts first, then we execute on charts afterwards. Looking at the picture above, you'll see an Excel table with numbers corresponding to where price is right now on the BTC chart. I've gone through this method of analysis on the first video on the channel, so do make sure to check it out and subscribe for more quantitative analysis like this. But I'm going to break it down in details right now. The main idea of this simple quantitative analysis table is that we measure price in percentage terms from a certain level. This gives us a green color if we are above the level, or red if we are below. Also gray if we're still hugging the level closely and haven't moved from it. Simply enough. Which level, you might be thinking? And I've gone through this in details in the last video. But the level is called trend origin point, which a successful break of signals a new trend starting, namely trending market conditions. And underneath this level, you'll be ranging in order to avoid trading. So we have a level on the chart, where above it, we are long bias. Underneath it, we're chopping and ranging, no bias. Simple, but powerful. How to locate this level on the chart? It's very simple. A new trend in any market starts after a successful break of the third structural break in this nascent trend, aka trend origin point. Okay, let's take a closer look on how we find the third structural break, aka trend origin point, on the chart. If you're familiar with market structure, locating the third structural break in a trend should be easy enough for you. But if you're not, this is how I do it. In an established trend, like this trend, downtrend right here, I keep an eye on the top of the last pullback, this point right here. This is the last pullback, the top of it is this point right here. If that breaks like it did here, that would give me my first structure break in this nascent trend. Not merely enough for a new trend to start. For my second structure break, I need to see a pullback after the first break, like this right here. And the top of that pullback forming a point where a break off gives me the second structure break. We see first break right here, pullback. The top of this pullback formed a point where when it broke right here, this gave me a second structure break. First break, pullback, break that pullback top. This is our second bullish signal. For our third bullish signal, aka trend origin point, we also look for another pullback after the second structure break. Second structure break, another pullback. The top of that pullback gives me a potential trend origin point. I say potential because it hasn't broken it successfully yet. Once the third point is broken, we are in the green in our Excel table and should bias only long. So going back to the table, now that we know how to locate trend origin points, which are the levels you see on the charts drawn on 3 different time frames to the long and short side, we take a look at what the table tells us from where Bitcoin price is here right now, and we would see only green at this point right here. A very strong bullish bias is formed from the simple table by measuring price in percentage terms at this point from these different levels, which are trend origin points to the long side being the green ones and to the short side measuring on 3 different time frames. And measuring price in percentage from that and logging them in this simple color-coded Excel sheet gives us this, let's call it overview of the market and a bias that is very clear. This is very accurate. You can test it yourself on any chart and you'll see how correct directional bias it will give you. It will also tell you when not to trade if the colors are lighting gray, red, and green, namely mixed signals. Then you shouldn't trade. Then you should go find another market that's lighting all green or all red for that sake. But this is a very strong bullish signal on BTC right here for us quant traders, where most other traders were looking at shorting this right shoulder and this head and shoulder pattern right here. Through backtesting around 3,000 trend origin point trades on FX reply backtesting tool and also screenshot cataloging those trades, there's a few possible scenarios price can act out around trend origin point. I'll go through each of them in details with a corresponding example from a screenshot catalog in a separate video, so do stay tuned for that. But not to make this video too long, the scenario we see most often in markets, call it your break and butter trade, will be this one right here, where price breaks the trend origin point level, comes back and absorbs the last structural point, so namely one structural break against the main trend, then starts moving in a bullish trend. But to take a live example from the BTC chart we saw earlier, if we look at this scenario right here, which is the break of the trend origin point and hold structure scenario, we would see something like this. So looking at price action around the weekly trend origin point right here, price broke it, returned to structure, held it, then proceeded into the bull market we are in now. So that would be scenario number 2 right here. Trend origin point is put in place, pullback, break of trend origin point level, come back, hold structure, then proceed into the bull market we are in now. So do take screenshots of this and go and test it yourself. But as we said, I'll be going through a real trade breakdowns with screenshots from every scenario we see here. So make sure to subscribe for that, and thanks for your time.